All right. Good afternoon. Good afternoon, everybody. It is Friday. I think that song says Friday. I don't know the rest of the words. I just know it's Friday and everybody lives for the weekend. Like that was back in my day. They say now it's Friday, but we used to say living for the weekend. Yes, right here in Shekinah Services, we sing too. Ain't that something? Listen, I want to close out this week with part three. I don't know how many parts I'll be able to get to you, but I am uh, trying to bring it because this is the time that you need to be prepared because your tax season, your business goals, and all these things are coming to fruition. And this is a great time. This is the seventh month. You out of the 6th month, and you're going into the 7th month of your business, and so you need to get some things straight. And I'm just here to give you little tips, a little understanding to help you get straight. So today, very quickly and short, we're going to talk about business entities or types of business entities. And I have my notes everywhere because I really want to make sure that you get this. When I talk about a business entity, I'm talking about it is where you form a business and you place it in a particular category as to how you're going to conduct your business. It may fit your product and services and your plans of where you're trying to go. And so for the government separates your business entity, and each one of them has a particular requirement on a federal level and on a state level. I want to talk about these business entities just a little bit. I will be having workshops, webinars that you can get on, and I will be more distinct about what these entities are and how they operate, their advantages, disadvantages. But today, I'm just going to introduce them to you because these are some of the things that you need to find out so that you can have your business in the right place, okay? One reason I do really want to talk about business entities is because so many people have this wrong. They have the information wrong. Okay. They're not sure where they're trying to go. But when we have bits and pieces where we get on the internet, we go through, what do we say? We go through Google and so forth. And then we pull up things and we read them. We got that do it yourself spirit, right? And you read them and you think you truly understand them, then you can misinterpret this language financially and what it really means. And so I'm going to let me just start with naming these types of businesses for you. And these are your average small business choices in businesses. You can be a sole proprietorship, general partnership, limited partnership, limited liability company, C Corp, and S Corp. So let's go back to that again. So if you're choosing a business entity that is recognized by the government, they have separated us into different types. And these types are sole proprietorship, general or limited partnership, limited liability company LLC, or C corporation or S corporation. Okay. Sometimes you'll see people describe this and say, oh, there's only five, there's only four, there's only this. But this, we say six because it breaks it down to the types of LLC and how you can declare your LLC, either single member, either a general partnership, or a limited partnership. Now, I won't go in to define each of them because this is going to be in the class that I teach, but I want to start and give you a basic overview of these so that you can start taking a look at that, okay? And then you can come back and join my webinar and we'll go into in depth on some of them, what they mean to you, their advantages, and their tax advantages or disadvantages, okay? So let's just start with sole proprietorship. I want to say this one, and I'm going to be explicit as I can on this one because so many people get this mixed up. Everyone is saying you're not a business if you are a sole proprietorship. I That is a total misrepresentation and a misunderstanding of legal terms and what these things mean. Okay? You kind of have to use some common sense. If the government allows you to file as a sole proprietorship, why do you think it is not legal and it's not a real business? We got people walking around saying, hey, you don't have a real business if you're not an LLC. That is false information. You must understand that anytime IRS will allow you to submit something and pay them some money off of it, it's got to be real. That doesn't even make any sense. So you got to seek for understanding. And hopefully today, when I do this one, we will talk about, I'll give you a little understanding of what this means and the difference between this, LLCs, C Corp, S Corp, and so forth. Okay, just a little bit, not a whole lot. So let's talk about sole proprietorship. That's number one. You can file your business as a sole proprietorship because it's the simplest business entity that a person can start. This person can be married or be the sole owner. It can be a one person that operates a business. Generally, it is a one person that operates a business. If you launch a new business and are the only owner of it, then under the law, you are automatically set up as a sole proprietor. As a sole proprietorship, you do not have to have an EIN number. That's only given to those who plan to have employees. Common sense. EIN. What does that say? Employer identification number. That means that you plan to employ people. Okay? And then that number makes a distinction, or is a federal distinction and a state distinction of you employing people and you paying taxes, Medicare, Medicaid, Social Security on those people, and it's registered that way. Otherwise, if you are operating your business and any business, any, as they say, side hustle that you will file taxes on, is automatically a sole proprietorship, and you use your Social Security number to make a distinction. That's all. You, in your business, you can DBA it. You can be Clarissa Pace doing business as Shekinah Services. Is it totally required? No, that's not. But you can make a distinction depending on your local government and your state government to do the DBA. Now, people are saying, generally people that are sole proprietorships are freelancers, consultants, other small business professions, cake baking, artist, singing artist. My son is an artist. He can be sole proprietorship, or he is one in his business. So doing hair, barbers, beauticians, photographers, you can do sole proprietorship, right? Because it's easy to start. You do not have to register this business with your state. There's no corporate formalities or paperwork that's required, such as minutes and bylaws and operation agreements. You can deduct most of your business losses on your personal taxes. You do not have to have a business tax form to do so. Some real estate, if you're doing small real estate transactions, your sole proprietorship. So it makes filing taxes easy. And you file your taxes on a Schedule C, which is a profit and loss business form that is on your 1040 form. Okay? And that's the advantage of this. there are people, I want to speak to the fact that people are saying government don't recognize sole proprietorship. First of all, it's straight out false. Okay? You have to determine where you're going, what your business plan is, to even decide if you want to grow from this. And some people do, and some people stay sole proprietorship. Go search the longest company that has been sole proprietorship and you'll find them. Okay? But what it is recognized in RS is what you call sole proprietorship. You call it a disregarded entity. That's a tax term. That's not a personal term. And it does not mean the same thing that it would mean to us if we disregarded something. Doesn't mean it's ditched and it's not legal and it's not all of those things that people run around here and say, well, you don't really have a business unless you have LLC. Stop. Okay, that's my personality and my teaching. Okay, I'm not one of those other people. So that's a tax term, and it implies that your business entity will be disregarded or ignored for federal income tax purposes. Now, what does that mean? The most common disregarded entity for federal income tax purpose is sole proprietorships and LLCs that are single member LLC companies. This means that IRS disregards the sole proprietor, which is the same as LLC, single member, as an entity separate from its owner, and the owner reports the LLC's income and deductions on a Schedule C. It means that if something happens, you are still responsible for the liability. It comes down to IRS disregards this as a separate business, meaning a 1065 is not filed, nor is an 1120 filed, or a C Corp documents. Those things do not have to be filed. That's what that means as a disregarded entity. It does not mean unrecognized as a business. That's a tax term. So please understand that the taxation is simple for both sole proprietorship, and if you're LLC, single member, which means you do not have a partner, 50%, 25%, or whatever owned business, then you're a single member. It's still a part of your 1040. You don't have a total separate business document that must be filed. And this is a simple way to start any business and take advantage of the expenses that are incurred so that you can lower your tax liabilities. Very simple. This is what we do. People who are MLM, network marketers and so forth, I think somewhere people started saying, oh, well, you need to go ahead and turn your marketing business into an LLC. You can't turn something into something that's already something. So most of these people that have their businesses set up where you can become a part of it, you become a part as a sole proprietorship, but they are already protected with as a corporation. Okay? So that's something you need to know, because I've seen people mishandle that as well. If you sell jewelry, if you sell makeup, if you sell financial services, so forth. I think there are two industries, and I can only think of one, but I know there's another one I can't think of, that cannot go under sole proprietorship or LLC, and that's insurance companies. Okay? They cannot be LLC. All right? So as a sole proprietor, there is no separate entity. So the business income is the individual owner's income and is reported on Schedule C. Once again, that income, the reason people move to S Corp is because they want to pay themselves separately a reasonable salary, and then they either become W-2 workers or 1099 workers that report their salary. But otherwise, every part of the income that comes in that business, you are responsible for. So that's why people go to S Corp, because they start making good money into their LLC, single member, or their sole proprietorship. They're making $50,000 or more, and then it helps save on their taxes because it's taxed differently, and then they move over and become an S corp. I hope you understand that, so that you can stop. If you're not ready for, some people are not ready for S corping. Some people are not ready for LLCs, because there comes a responsibility. I know you can just hop and jump and go to the state and sign up and get this and come, but they don't really know how to manage an LLC or above, let alone, manage a sole proprietorship is pretty much around the same, but you don't know the expenses that come with it. And so you just take off and start doing things. So that's what I want to help you understand, that you're okay. Breathe, take a seat, and don't join the unlearned and making statements that are untrue and uneducated, okay? The next one we talk about is you can take your LLC and declare a partnership. And that makes sense, right? Because if you have a partnership, it may be a husband and wife, it may be parents and children, maybe a friend, a neighbor, and you guys are joining in business together. And what happens, this becomes a general partnership. The key difference is that there are two or more owners. There are two kinds of partnerships, general and limited. In a general partnership, all partners actively manage the business and share in the profits and losses. Okay? That's what makes it a general partnership. And a limited partnership, unlike the general partnership, is a registered business entity, of course. You must file your paperwork with the state as so. And in the LP, there are two kinds of partners: those who own and operate and assume liability, okay, which these are the general partners. And then you have the limited partners, who are investors, and they may be silent partners in this business, but they don't share in everything. So you have to make a distinction as to where am I in this business, and when you file taxes on there, then you can make that distinction. Limited partners don't have control over business operations, and they have fewer liabilities than the general partners. This typically acts as investors in the business and also pay fewer taxes because they have a more tangible role in the business. Okay? So then we go to your S corporation. You can go ahead and declare yourself an S corp, which is a total tax structure, totally different tax structure. And it preserves the limited liability that comes from a C corporation, but it is what's called a pass-through entity for tax purposes, meaning the results are passed through your individual tax return. That means, similar to sole proprietorship and partnership, an S corp's profit and losses pass through the owner's personal tax return. There's no corporate level taxation for an S corp, meaning the results, the K1 that is received from this S corporation, the taxes are passed through the personal return, but it's done separately, and it's a different expense now. When it comes to those of us who prepare these returns, there is a different expense. So we won't talk about. I'm not going to talk about any pros or cons so far of these business, okay? Now, the more expensive corporation is your C Corp, all right? It's your C Corporation. It's an independent legal entity that exists separately from the company's owners. You got board of directors, officers, shareholders, and all of this kind of thing, and you're going for the gusto, okay? You might have franchise, you might have franchised your business, and some people do this and they should not. Just to say that I've seen people do this and they really need to shut it down because they're not ready. They don't even make any money. And they'll come to me and say, Clarissa, I really didn't make any money, even in S Corp. And so, can you just hook me up? And no, the price for getting this done, I don't care how much money you made or didn't make or expenses or so forth. It is what it is. This is a more tedious formality and it must be done. So, C Corp is an independent legal entity and it is regarded separately with IRS. So is the S Corp. It takes on its own liabilities. The pros is that you don't have personal liability at all in the debts and the liabilities of this company. And you're eligible for more tax deductions than any other type of business. So you just have to be careful to go ahead and study to understand what will make the difference. And I'm going to say many of these small businesses are what I call small mini businesses, because the government, small business on the government level is like 500 employees and stuff or more. And you sitting around going, oh, this is just me and I'm really small. But the good news is you get a chance to deduct the same as any other corporation. Any most deductions are available to you and you get a chance to save money, especially if you have a job and you're doing a small business on the side. Then you get a chance to write off things that will help you save on your taxes. So I hope this helps you a lot. I wanted to get that out because people are confused about it. And I want you not to say things that are not true, are not educated. And I just hope that I was able to make that distinction with the sole proprietorship because, like I see a lot of people who just pick up. It just depends on the type of product and services you offer to in order to go to the next level of S Corp and C Corp and partnerships, whether they're general or limited. Okay? You need to know that. And please don't keep convincing people to get an LLC when it's not necessary. Start learning business. And so I'm going to say this. What do I mean when I say start learning the business and what's not necessary? There are so many people, and we're going to talk about record keeping next week. I'm through for the week. Not only record keeping, bookkeeping, and business management. We're going to talk about those a little bit. I'll give you a little hint on that. Again, for extensive education, you can be able to book one of my webinars, and we're going to go through this, and hopefully it'll help you. We have people who, first of all, start business, hear that they can write off their expenses, but the record keeping is horrible or no records at all. So they may go to TurboTax or any other name brand tax and just put stuff in. Okay? Then they want you to straighten it out if they get audited, or they're great because they got all this money back and they don't have no records. Not only do you not have proper records in place, you don't even understand what is legally deducted for your business and your services. Okay? So my recommendation is to try the business under sole proprietorship. If you don't have the mindset yet and you're still making excuses and saying, I don't have time. If you're a business owner and you're saying, I don't have time, you need to go work. Because business owners and entrepreneurs are more responsible than that. Okay? We grow. We grow out of our shortcomings and we become better. Okay? We change our mindset over the time and we become better at what we do. So we can make that money and build wealth. All right? This has been your tip for Friday this week, part 3. And I love it. Thank you for watching. Tune back in. I'm Clarissa Pace, all things business, Shekinah Services. Hit me up. Go to my website, shekinahservices.com. See what we offer. And by all means, watch for my dates for my extensive webinars and in-person events so that you can come and better manage your business. God bless you. Have a mighty Friday.